Chad is here from D.A. Davidson to talk about this week's stock market news. Let's start off with yesterday. It looks like it was higher. So what drove the market?
That's exactly right. It was up 105 points on the Dow Jones yesterday, closed at a new record at 28,621. The S&P 500 and the Nasdaq also hit records. In fact, the Nasdaq crossed 9,000 for the first time. It seems to be that we're looking at the holiday season and expect retail sales from Christmas to be better than expected. And then along with that, continuing to watch the trade deal side of things, and that's been better as those trade tensions have started to reduce.
All right, and what can investors expect today?
Well, this morning the Dow Jones futures are already up over 100 points, so expect a higher opening again this morning. Kind of interesting, Victoria, so far year to date the S&P 500 is up 29.2%. If we close above 29.6% higher for the year, that'll be the best year in the U.S. stock market since 1997.
Wow,
Yeah.
Making history. Feels like just yesterday, but it wasn't.
Yeah, I know.
All right, and I also wanted to ask, now there was a new law that recently passed, and that law could affect our viewers' retirement. So can you expand on that and tell us what it is?
That's exactly right. We just talked off air. It's kind of hot off the press. On December 20th, the Secure Act was passed, and it will affect a number of our viewers out there, especially those that are age 70 and a half or have done some estate planning with their IRAs. One of the things is at age 70 and a half, we were required to take our required minimum distributions out of our retirement plans. That now is going to change to age 72. So that's a big deal. The second thing is, for those of our viewers that are over age 70 and a half, they were not allowed to put in traditional IRAs. That has also been eliminated. So now as long as they have earned income, they're allowed to put into a traditional IRA, which is $7,000 a year they could put in and take a tax deduction and continue to save. And then the third one has to do with beneficiaries. In the past, there was what was called a stretch IRA, and it allowed a beneficiary to take that money out over a period of decades and paid tax little by little as they took it out. That has also been changed so that they'll have to take it out within 10 years and start paying that tax earlier. So those are some big things. Again, very new, and so there's a lot of details we have to learn. So as always, we're not providing tax or legal advice, and they'll want to seek a tax and legal professional as more of the details get worked out.
All right. Well, Chad, thank you so much for being here with us today. We do appreciate it. Have yourself a good weekend and a Happy New Year.
I was going to say Happy New Year to you too, and Happy New Year to our viewers.